All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're going to be talking about is I have 10 of the top best dividend growth stocks for April 2024. So a very current and very recent statistic. And we're going to be talking about these 10 stocks. And what I'm going to do in this video is I'm going to go kind of over one by one, starting with Booz Allen Hamilton Holdings Corporation, ticker symbol BAH. And what I'm going to do is I'm going to show you on Yahoo Finance how the stock has performed over time. We're going to dive into very small markers. This is going to be very basic, like the market cap. We're going to look at the earnings per share, and I'm going to let you guys know if I feel like the dividend has more room to grow. Plus, we will also go into the historical data, checking over the dividends and seeing how the dividends have grown over time. Because you know what, although we do a lot of high dividends on this channel, one thing we don't talk about is high dividend growth rates. And dividend growth rates for long-term stocks can be very exciting and very interesting because you're buying a stock which is going to appreciate every single time you get paid a dividend, kind of on a year-over-year basis, right? But I find that very exciting, very interesting, because once you put in your money, it's going to continue to grow. At least that is kind of the plan and the expectation when you're investing in these kinds of dividend growth stocks. So if you guys do enjoy this video, please do remember to subscribe. We're up to 4,262 subscribers, and I hope you guys enjoy this video. I feel like this video is going to be a touch slower than our normal videos because I just want to take my time and go through each of these stocks, but I hope you guys do enjoy. So first stock, Booz Allen Hamilton Holdings Corporation, ticker symbol BAH. We can see they have a trailing 3-year average annual dividend growth of about 11.3%, which is pretty fair. Starting dividend yield 1.4%, which is very small. You'll see with a lot of these companies, they're all going to have small starting dividend yields, but that's due to the fact that their share price over time grows. And you can see it's been growing all the way back since February 1st, roughly 2011. So you can see here it's been around for about 13 years or so, and we could see here a 1.4% dividend. I'm looking at the earnings per share and I'm looking at the forward dividend yield, and you can see here that there's still about 33% or so to go. I'm hoping my percentage is right here, but there's definitely more room to increase the dividend at the current earnings per share. A $20 billion market cap, and you're going to find for a lot of these companies, they're high market cap companies with huge amounts of kind of capital around them, and so these are definitely some stable companies. But as you can see here, it says annual dividend growth rate for the past 3 years, 11.3%, and we can currently see that going back to roughly about 2021 when the stock was paying 37 cents per share, and it is now currently at about 51 cents per share. So about a 30% increase from 3 years ago, which of course we'd like to see because you know what, 11% times 3, 33%, somewhere about there, 34%. So that is our first stock. Our first stock, BAH, Booz Allen Hamilton Holdings Corporation. Going to our second stock here, we are going to Elevance Health Inc. Ticker symbol ELV. And my bad, I'm really bad at reading and pronouncing, but we're going to get through it. So the trailing 3-year dividend, 13%. That is pretty fair. You could even see here it mentions as well, I didn't do this for the first one, for BAH, 12.6%. That is their 5-year average annual earnings per share estimate. And going to ELV, we have an 11%, almost 12% average annual earnings per share estimate with a 3-year average dividend growth of 13%. So when we go to ELV, this is actually a stock that I didn't even put in here. So we're going to have to do this one on the fly here. So let's see exactly what their share price is at, and let's see exactly their stats right here. So we got ELV, a $506 stock. We could see here that over the max period, once again, their stock price has trended up over time. You can see even it started at a marker back in 2000, about $30 or so, and has really increased all the way up to $500. That is great appreciation over time. We could see they have absolutely massive amounts to go their dividend. Their earnings per share is at $25 per share, and their forward dividend is only about $6. So they could increase their dividend by 3 times, really making this about a 5% dividend. But obviously they're going to probably do that over time because they're going to increase their dividends over time. Why Why rush the process when they can just do it their way and increase it over time like they have? And we could see here, dating back, what I want to do is go all the way back that I can, back to March 2011. It's paying about 25 cents a share. If you were to hold on to the stock for about 13 years, your dividend would have more than 6 times, because 6 times would be $1.50, but it's now at $1.63 per share. And that's pretty fantastic when we're looking at this, even 13% dividend growth rate over the past 3 years. So this is a dividend that is constantly growing every single year, which is the theme of this video. And so all these stocks should be doing it. Coming in a little better is ITT Company, ticker symbol ITT. Now, I don't know much about these companies. All I'm really showing you is the trailing 3-year average annual dividend growth, which is a little higher at 13.2%. So not much crazier. Once again, stock price growing over time, which is beautiful. That is what we want to see. Any opportunities to buy within the past year? Well, look, even this is the past 5 years, but within the last year, the stock has increased almost 40% too, while still paying this, a very, very small 0.93% dividend. We could see we have a lot of room to grow with these dividends. Earnings per share about $5, forward dividend yield about $1.30. So there's a lot of room to grow this dividend. Let's see what they're paying out in terms of their dividend. It's a $132 stock, and we could see here that of the past 3 years, going back to 2021, they're paying about 22 cents, and now they're currently paying about 32 cents. So it looks like a 10-cent dividend increase over the past year, and a very small dividend for this one. So it's something to keep in mind. Your dividends will grow over time, but it will take years to develop. Maybe you want to look for a stock that pays about a 3% dividend or so and still have that dividend growth. So you can have a bit of dividends now and then continue to grow those dividends. So the next one we're talking about, UnitedHealth Group Incorporated, ticker symbol UNH. And they have a trailing 3-year average annual dividend about 14.6%, almost 15% here. So when we're looking at this company, a huge market cap. So we assume this is going to be a pretty stable company. You can see that the share price has grown over a very long period of time. You see the earnings per share is looking great, $23.87 per share. And their dividend is only about $7 per share. So you can see they can grow it once again 3 times and still be okay. But obviously they probably want to reinvest in their company and do whatever they would like to do. And that's why they pay the dividend they do. Going to their historical data and going to their dividend data, let's see exactly what this company is paying out. They are a $459 stock. So they are a decently high share price stock. A lot of these stocks, I'm not sure if they'll do stock splits or anything like that in the future where they'll lower their share price, but something to keep in mind. Now, when we're looking at this company here, you could see that in 2021, they were paying about $1.45. They jumped up to about $1.88. And you could see here they paid $1.88 for the past 4 quarters. And so they are definitely due for another dividend increase sometime soon. So that's something interesting to look out for UnitedHealth. And one thing that I could really mention is also the periods and times when they do pay dividends, because this one pays out in March and December. So this is kind of like the basic dividends. Sometimes you'll see them on February and January. I like to look at the starting months, but this starting month is March, and then the others will follow. Now, moving to the next one, we have ADP, Automatic Data Processing. And I do want to say, if you guys are still with us, please do remember to subscribe. We're up to 4,262 subscribers, so thank you for that. Now, the trailing 3-year dividend for ADP is about 14.6%. So literally the exact same as UnitedHealth. Let's check out their stock a little bit. So they are a $245 stock. You guys are going to need some dollars to invest in these kinds of stocks because they all have extremely high share prices, which is okay because you know what, we're holding them for the long term. These are investments. But you can see here with a earnings per share of about $8.50 and a forward dividend about $5.50, $5.60 here. They don't have as much room to grow their dividend as ones like UnitedHealth or the ITT Company, but we could see here that share price has grown over time, starting out at a $2 stock. Now I don't want to check out the Yahoo Finance stock chart there, but look at this. Starting out at roughly a $2 stock, if you bought this back in 1985, this is 100 times. Now, of course, this is a long time to wait. You're looking at about 40 years or so, almost 40 years, 38 years of you having to wait. But of course, over this 30-year time period, the stock has risen, it has fallen, and it's also paid some great dividends. I wonder how far back this dividend history goes as well. And I did notice they are a $100 billion market cap, so nothing to shy away from there. So they're currently paying a 1.4% dividend. Let's see how far back we can go in Yahoo Finance. And we can pretty much go all the way back, which is what I love to see. Back to 1983, they were paying not even a cent. They were paying 0.69 of a cent. So very small. And you could see here over time, they grew to 1 cent, 2 cent, 3 cent, 5 cent. I see 12, 14, 31, 38. And over time, if you've held the dividend, your dividend has increased more than 140 times, almost like 280 times, due to the fact that it was half a cent, almost half a cent. Now it's $1.40. So that is something amazing to see as well. The dividends really do grow. And if you were to buy way back when, let's do an insane calculation here. Okay, let's make this interesting. So my bad. I'm going to go back to the dividend history here. If they paid out 0.069 times 4 for 4 dividends, they paid out almost 3 cents. Okay, divided by the share price back then, which was looking like, what was that looking like? Let's go back here. It was looking like $2.57. Okay, divided by 2.57. This is going to show you guys kind of what the lower dividend yields are showing you. So at $2.57, they were paying out a 1% dividend, which they're currently paying about there we go. They're currently paying about a 2.26% dividend. Okay, so bigger than what they were paying before. But you could see here that 2.26, if you were to have held on to that stock now, you're looking at a dividend that is way bigger than that share price. You're looking at a dividend that's 217% on the current shares you invested way back when. Of course, this is an extremely unrealistic example because you would have to pick the stock 40 years ago and held it for 40 years. Look, these are all long-term investments. Once you buy these stocks, I'm pretty sure you'd be looking to hold them for the long term, but obviously that is a lot of time to wait, but that really shows the power of compound interest, how your early shares are paying more than double what you purchased for the stock way back when. So that's something to keep in mind when you're investing in these long-term kind of low yield investments. Going to the next one, we're going to speed it up here. We're going to Marsh and McLennan Companies Inc. MMC is the ticker symbol. They have a 5-year average annual dividend growth rate of about 15.2%, which is looking fantastic. When we go to their stock here, let's just go to their kind of overall page. You can see their max chart history. They're from 1986, not as much growth as ADP, for example, but still amazing growth with the stock trending up. It looks like it's only trended up here, which is fantastic. We go to the past 5 years. Even during kind of the whole COVID recession here, it went from $111 only down to $86. So it dropped maybe about 20-30%. So a pretty stable company all in all. You can see the earnings per share about $7.50. The forward dividend just under $3 at $2.84, paying a 1.4% dividend. So they do have some room to grow. Looking at their dividend history, I just want to check the past 3 years for the stock. We can see that in 2021, it was paying about 54 cents. Now it's up to 71 cents. And it looks like they as well will be doing a dividend increase for the next kind of payment, which should come in July, it looks like. So you see how this is interesting because some of the other companies like ADP, I'm not sure if it was UNH, you could see that their dividend history, this one pays in April, July, October, and January, whereas the last one paid in March and ended in December. This one ends in January. And it's nice to pick up stocks with different dividend kind of months mixed in between, so you're always getting a consistent paycheck, which is kind of nice. So going to the next one, we have Domino's Pizza. DPZ, I actually really like Domino's Pizza. I can't lie. Everyone says it's the best pizza. I beg to differ. I have one by my house that's decently better, but Domino's Pizza is definitely the bomb too. So we're looking at a 17.1% 3-year average annual dividend growth rate. When I go to Domino's Pizza, man, it's trended up like the smile on my face when I eat a Domino's Pizza. You could see here that it went from a $16 stock back in 2004 all the way up to a $500 stock. They are a still huge company, but only about an $18 billion company. They are a pizza company, so I mean, like, $18 billion for a pizza company is pretty huge when you think about that. But you're looking at about 14.67% for the earnings per share. A lot of room to grow that dividend. They can more than double that dividend and be okay currently. When going back to the dividend, they have a 17% dividend growth rate. And as you can see over time, all these stocks are getting bigger and bigger dividends as we go through this video. And let's apply this right now. So we could see here that from 2021, they were paying under $1 per share, 94 cents per share. And now they're paying $1.51 per share, which is pretty fantastic. Still a $500 stock. So in order to even receive $1.50 every quarter, you'd have to spend about $500 in order to do that. So it is still, I don't like saying stocks are expensive because it's just a high share price. That is all it is. There's a high starting amount to get into the stock, but it's very difficult to say a stock is cheap or expensive based on the share price because that's not always true. It's always on the value of the company itself and what it brings in, and a lot of markers like that. Moving to our next stock, we have Target. And we're coming to the end here. These are the top 3 stocks. We have Target with an annual growth rate of about 17.4%, which is getting better, slightly better than Domino's Pizza. You can see here, Target, I'm sure you guys know what Target is. It's a kind of like a retailer like Walmart. And you can see here, actually, it's over the past 5 years had a bit of a downtrend, going from about $250 all the way down to markers as low as $110 and $175. Not a bad market to be buying at $175. Earnings per share looks good, just under $9. Forward dividend yield, just under $4.50. And we can see here, going to their historical data, going to their dividends, going to their max chart history. We could see back in 2021 paying about 90 cents. Now they're up to $1.10, but still not a super high share price stock as much as these other ones like Domino's Pizza, which is almost 3 times that marker. So that's something to keep in mind too. If you're investing in these long-term companies, you're going to have to be spending quite a bit on the share price, which could be a bit of a setback for some of those higher share prices. Next, we're talking about the Hershey Company. I love the Hershey Company. HSY is the ticker symbol. 19.4% 3-year growth rate. And I honestly wasn't too keen on buying Hershey. Look at they're a $40 billion market cap. They have an earnings per share about almost $9, $8.81, a forward dividend yield of about 5.48%. Their stock has grown since 1984 from $3 all the way up to the current kind of price at about $200 or so. Over the past 5 years, you can see rose to about $273 and had a bit of a pullback. And the reason why I wasn't buying Hershey's is because I was like, yo, I want to eat healthy. I don't want to eat chocolate. But then Easter came around and I was eating chocolate and I was like, man, I should buy some Hershey's. Their chocolate is fantastic. They're like the Willy Wonka of the real world. You know what I'm saying? But if we go back all the way to 2021, you can see here they're paying about 90 cents. Now they're up to $1.37. Everything is relative, of course, to the share price, but they do have a decently nice starting dividend yield at about 2.73%. So nothing too bad to shy away from when compared to all these other kind of lower dividend yielding companies. Now, the last stock we're going to talk about is MSCI, Inc., something like that. MSCI, the ticker symbol, absolutely jumping the 3-year average annual dividend growth to about 27.1%. 27.1% is the 3-year average dividend growth for MSCI. And when looking at their kind of share price here, going back to 2008, trading at about $32 a share, they went all the way up in 2021 to about $664, trended back down to about $412, so probably about $400 or so, and now they're back up to $540. So this is a stock, $42 billion market cap, so not a crazy market cap, but still a very big market cap. $14.37 per share is their earnings per share, and they have a forward dividend of about 6.4%. So even with a 27% annual dividend growth rate for the past 3 years, they still have a lot of room to grow this dividend and continue that 27.1% that they have been growing out. And when we're looking at their dividend price, let's look at their dividend history right here. So we're looking at back in 2021, they were paying about $1.04 for their dividend. Now they're at $1.60. So you could see even over time, what I do want to do, because this stock price goes back to about 2014 or so. So when the stock was trading at markers that we can't see currently, but we could see it was trading at, it was paying a dividend about 18 cents or so in 2014, so 10 years ago, and it is now paying $1.60. And just going back to the share price here, when it was paying back the 18 cents back in 2014, they're trading about $43 a share. Now they're at $500 a share. That is more than a 10 times increase in the past 10 years. And your dividend has also increased by a wide margin, which is fantastic. So I hope you guys enjoyed this video. These were 10 of the best dividend growth stocks for April 2024 with very recent markers going back their 3-year averaged annual dividend growth rates. I hope you guys enjoyed this video. These are all stocks that you can add to your long-term dividend portfolio. They have great dividends. They have great earnings per share. They have great share price appreciation and track records. So I hope this video served you well. I hope it opened your eyes up to the average dividend growth rates of companies, why they're so important, and why this will continue to grow your monthly income every single month when you invest in these companies. If you guys did enjoy this video, we're up to 4,262 subscribers. If you made it to the end, comment that you made it to the end and you enjoyed this video. If you did, if you didn't, it's all good. You guys can share your opinion. I won't take too much offense. I'll just try and be better next time if you guys didn't. But comment if you made it to the end, because this was a very long video, the longest video we ever made. And I want to say thank you guys for sticking around. I hope this provided with you guys with some value. I hope you enjoyed your time here, and I hope to see you guys in the next video.